As one air siren after another went off in almost every big city of Ukraine, including its capital, their echo was heard worldwide. Apart from the humanitarian consequences of the war, the world will also have to bear its economic costs. About 4,000 km away in India, the benchmark stock indices suffered their worst day in a year on Thursday. They fell 4.8%. Oil prices breached $100 a barrel for the first time since 2014, which is perhaps India's biggest macroeconomic challenge. This came after Russia launched an invasion of Ukraine and carried out missile strikes on its infrastructure. As the world's third largest importer of oil, India relies on other countries for more than 80% of its crude oil requirements. The global price benchmark for crude oil, Brent, hit $105 a barrel after yesterday's events. This could push India's oil import bill, worsening its external position. Higher oil prices aggravate India's inflation, widen the current account deficit, and put pressure on the rupee. The rupee weakened 1.5% to 75.65 against the dollar on Thursday. It could also force RBI to reconsider its accommodative stance. With Indian companies already reeling with surging input costs, higher oil prices and in turn higher fuel costs will exacerbate the situation across the board. Depending on the category and product type, up to 50% of an FMCG company's raw material basket can be linked to crude oil. Crude oil and its derivatives are used in making detergents, soaps, and cosmetics. Cement, paint, airline, and tire companies will also be impacted. Economist Yuvika Singhal tells us more about the consequences that Russia's actions will have on the Indian economy in the short term.
In our opinion, the Russia-Ukraine crisis could have a multidimensional impact on the Indian economy. And to a large extent, this depends on how long the current tensions that we are seeing continue to simmer. The primary manifestation of this or any other geopolitical unrest would be on India's inflation as the first line of impact. In our own estimates, a $10 per barrel rise in India crude basket adds nearly about 20 basis points to CPI inflation directly. Now, the government does have the buffer of reducing excise duties on petrol and diesel. A 5 rupee reduction on petrol and diesel could assuage or provide an inflation relief of about 8 to 10 basis points. And that is where I think the jugglery of the government would essentially be, because they would have to balance the inflation reprieve against fiscal costs. A 5 rupee reduction could cost the exchequer as much as 60,000 crores in loss of excise duties that it could have collected. Our own estimates suggest that a 10 barrel per barrel increase in India crude oil basket could have an impact of widening the current account deficit by almost 50 to 60 basis points as a percentage of GDP. What we are expecting is that from a level of close to about 1.5% of current account deficit in FY22, we could see widening of current account deficit by about a percentage in FY23. So from a balance of payments perspective, from a very comfortable surplus of close to about $43 billion in FY22, we could see a BOP surplus deteriorate into single digits in FY23. And that, too, in our minds, will be a big evaporation of support to the rupee. We ourselves are looking at a number of, in a range of 76 to 77 on rupee over the course of the next 3 months. While we do see depreciation pressures on rupee, we do not see runaway rupee depreciation pressures to the kind we saw in 2013.
Both Russia and Ukraine are not major trading partners of India, but certain sectors and commodities could feel the heat. The two-way trade between India and Ukraine was $3.1 billion in 2021. India's exports to Ukraine stood at $510 million, with pharma products making up 32% of it. Other exports include telecom instruments, iron and steel, agrochemicals, coffee, etc. India imported goods worth $2.6 billion from Ukraine last year, $1.8 billion of which is vegetable oils, mainly sunflower oil. Ukraine alone accounts for 70% of India's sunflower oil imports. Any supply disruption will raise the prices of sunflower oil, as India meets over 60% of its edible oil needs through imports, and sunflower oil accounts for 14% of India's edible oil imports. Meanwhile, bilateral trade between India and Russia stood at $11.9 billion in 2021. India exported $3.3 billion worth goods And once again, pharmaceutical products were the largest export commodity at $542 million. Other top exports include electronics, iron and steel, tea, and auto components. India's imports from Russia last year were $8.6 billion. Major imports were crude oil, petroleum products, coal, fertilizers, gold, precious stones, and precious metals. Russia is India's biggest arms supplier, delivering half of the total arms imports. The United States and Europe have promised the toughest sanctions on Russia. Ajay Sahai of the Federation of Indian Export Organizations tells more.
So far, what we've been given to understand that sanction has been put on many banks in Russia by US and UK. European Union may follow the suit, and since India's trade to Russia also happens in dollar, there may be restriction coming on the SWIFT also. We have to see what kind of sanctions are brought on the Russian banks, whether trade in US dollar is permitted or not, whether there is any cooling off period which is available. But one thing is very clear, that since now we are very much globally integrated, if any kind of conflict happen in any part of the world, it is likely to impact the global trade and the global economy. We have seen its impact on the global crude prices. There is no sanction or restriction which has come on Ukraine, but once we have a conflict in the region, definitely logistics challenges are also added. And we've been given to understand that many of the ship companies have asked that if the ships are moving to the Black Sea, then they need to inform, because the underwriter or the insurers would like to have a very closer look on such sailing. There are restrictions which has come on the ships which are under the Russian flags also. So not a good development, and this has probably come at the worst time when we are just looking into coming out of the COVID.
In addition to the impact on India's economy and trade, the Ukraine crisis has a direct impact on thousands of Indian citizens. Over 18,000 students from India are in Ukraine studying medicine or engineering, forming roughly 24% of total international students there. A few hundred of them returned before Ukraine closed its airspace to civilians on Thursday. From evacuation of Indian students to managing inflation and other economic consequences from the fallout of the Russia-Ukraine crisis, the government has a rocky road ahead.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.